But let me first go across to Agam to find what can one expect from TCS earnings tomorrow, Agam?
We're not expecting a very good quarter when it comes to the entire information technology sector. Because of the fact that we are expecting some amount of weakness seeping in from the BFSI space. On the whole, let's look at the kind of moves or the kind of results that we are expecting from the aggregation of the top 8 IT companies, and based on market capitalization. So we can expect about a near 3% increase in revenue sequentially and about 2.5% increase in profitability. Margins are expected to remain largely flat at somewhere around the levels of 20%. This is, of course, as far as your expectations go. Moving in, as far as the information technology is concerned, what are the challenges that you can keep an eye on when it comes to the second quarter? I've already spoken about the softness in demand for BFSI, but other than that, the other concern here will also be about the transition towards the digital services is still a work in progress. So we will be watching out for that. Of course, planned wage hikes increases will also be a part and something which will be factored into these earnings. The positives, of course, we will also be looking at the mid-cap IT counters which are likely to post stronger growth. Because of the fact that a lot of the expectations from the information technology sector are tempered, any big negative surprises may be taken in and lapped up by a lot of these investors. Of course, we've also seen the rupee, which is likely to have a tailwind as far as the IT sector is concerned. But moving in, what are the key things to watch out for in the IT space? Well, we are, of course, going to be watching out for the expectation on demand from the BFSI segment, updates in client spending, automation, and several other large deals. And finally, whether or not we can look at some changes in guidances. The probability on changes guidance is very low considering it is largely status quo, but you never know. Should we see a big company come up with a weaker than expected results, there could be an impact as far as this guidance is concerned. But on the whole, we're expecting a very quiet quarter from the Indian IT sector in general.
And Shraddha, how will it be for the banking sector?
Well, Pradeep, it's likely to be a case of same old for banking sector as well. So broadly, the underlying trends that we are expecting to see in the banking sector are likely to remain same as we have seen in the previous quarters. Let's look at it from a macro perspective. The 4 important parameters as far as banking sector is concerned. First, on the credit growth, the overall banking system credit growth remained absolutely subdued at 6.5% in the second quarter. Retail loan growth, however, remained resilient with growth of 15 to 16%. So that should provide some support to growth because corporate loan growth remains sluggish as far as the second quarter is concerned. Talking about the asset quality aspect as well, slippages are expected to decline on a sequential basis. But having said that, when it comes to the retail loans, analysts are expecting some pullback as far as the SME and retail slippages are concerned. But when it comes to agricultural loans, they do expect a slower recovery. Broadly, on the corporate loan front, they don't see any major negative surprise except for the telecom sector, which they will be closely watching. Moving on, we also have treasury income. Your 2 banks, SBI and ICICI Bank, are likely to book profits from the stake sale gains as far as their general and life insurance subsidiaries are concerned. But bearing those two, we have the 10-year bond yield actually increased by 15 basis points during the quarter to 6.66%. So there you are. So they will see muted treasury income. And lastly, on the margin front, we're expecting to see a steady to slight negative trend as far as the margins are concerned. And that will be owing to 3 factors. One is the reduction in the savings account rates, the reduction in the MCLR rates, and thirdly, the high gross NPAs that the banks are seeing. So all of them will have an impact on the margins, and that's how the picture is broadly expected to look like.